Welcome to the Daily Market Recap. Today is Monday, August 17th, 2026. And what a wild, action-packed ride Wall Street handed us today. Folks, stocks pulled off an energetic rally as soft inflation data and robust tech earnings gave the bulls total control, sending major indices charging higher across the board. Lower Treasury yields provided the ultimate rocket fuel, turning what could have been a sluggish afternoon into a full-blown buying spree as investors practically tripped over themselves to jump back into risk assets. Taking a look under the hood, tech and communications absolutely stole the spotlight today, flexing their muscles while consumer cyclicals tagged along for the victory lap. Meanwhile, energy and utilities ended up lagging behind as falling crude oil prices cooled off commodities, showing us a classic risk-on rotation where traders dumped defensive plays to chase high beta growth. Over on the sentiment gauge, the CNN Fear and Greed Index locked in at a cozy 60. That places us firmly in greed territory, meaning traders are feeling pretty confident, though not quite at that unhinged euphoric level where people start mortgaging their houses to buy meme stocks. Our headline story today is all about the macro magic. Softer than expected inflation metrics gave Wall Street the green light it was begging for, sending interest rate yields slumping and pushing mega-cap tech stocks parabolic. Traders are now pricing in aggressive central bank interest rate cuts before year-end, turning yesterday's market hesitant wallflowers into today's aggressive dip buyers. In our second big story, crude oil took a noticeable nosedive, slipping sharply as global inventory builds and demand forecasts hit a sudden speed bump. While that was a bummer for big oil producers, it brought a huge sigh of relief to consumers and airline stocks, keeping overall market inflation expectations delightfully low. Rounding out our top news, fresh retail spending numbers blew past analyst expectations, proving once again that the consumer simply refuses to stop shopping. Despite higher borrowing costs, resilient balance sheets are giving economists hope that a soft landing isn't just a fantasy, it might actually be happening. Leading our leaderboard of winners, semiconductor wafer specialist Ext Inc. blasted off with an eye-popping gain of over 17%. Wall Street went wild after the company reported blowout quarterly earnings driven by insatiable AI chip wafer demand, proving that anything remotely connected to artificial intelligence is still pure gold. Next up, biotech powerhouse argenx SE soared over 16% in a massive rally. The catalyst, stellar late-stage clinical trial results and exploding sales figures for its flagship autoimmune treatment. Investors sprinted into the stock, proving that biotech can deliver huge paydays when the science actually hits. And rounding out our top three gainers, Figure Technology Solutions rocked the tape with an incredible 13.7% jump. A fresh partnership announcement and surging loan volume on their blockchain platform sent short sellers running for the exits, powering a massive breakout above key technical resistance. Now, over to the bargain basement of pain, ticketing giant StubHub took a nasty 11.8% beatdown today after issuing surprisingly weak forward guidance. It turns out even concert lovers have limits, and concerns over slowing ticket volume sent institutional buyers rushing for the emergency exits. In second place on the sad list, Paula Belli Group crashed almost 10% lower. The supply chain e-commerce platform got hammered after missing top-line revenue estimates and cutting full-year outlooks, leaving shareholders holding a very heavy bag. Finally, retail favorite Miniso Group sank over 9% as margin compression concerns and softer international sales dragged down sentiment. Despite their popular pop culture storefronts, investors decided to take profits and look for greener pastures elsewhere. Checking the charts, our favorite benchmark ETF, the SPY, mounted a fierce charge to close near $776. On the upside, immediate resistance sits right around the 52-week high near $780. If the bulls can break above $780 buy, we could see a run towards $785. On the downside, primary support holds firm at $770, with secondary backstop support down at $765. Turning to the tech-heavy QQQ, the ETF showed immense relative strength, charging up towards $731. Immediate overhead resistance looms at $735, a level that has capped recent rallies. If buyers can clear $735 with heavy volume, $740 is next. On any pullbacks, key support rests at $720, followed by strong demand around $712. Looking at small caps through IWM, the index had a solid day, pushing higher toward key range levels. Resistance is clearly marked at $225, a level small caps have struggled to conquer all summer. If IWM breaks out past $225, expect big momentum to follow should a pullback occur. Solid floor support sits right at $218. Switching gears to the crypto market, Bitcoin continues to consolidate right around the $63,500 zone after bouncing off intraday lows. BTC needs to reclaim resistance at $64,500 to ignite a real breakout towards $66,000. On the flip side, crucial support holds at $62,400, and losing that level could test the psychological $60,000 floor. Meanwhile, Ethereum is treading water just under $1,900, sitting near $1,890. ETH is facing stiff resistance between $1,920 and $1,950, which it must break to challenge the major $2,000 level. If sellers push harder, key downside support waits at $1,850, with a deeper safety net around $1,800. Across the broader altcoin market, performance remains mixed but generally positive, with layer ones like Solana and BNB grabbing modest gains of up to 3.5%. Total crypto market capitalization held steady around $2.19 trillion, showing that traders are keeping their capital warm while waiting for Bitcoin's next decisive move. Summing it all up, short-term market sentiment remains cautiously bullish, with the Fear and Greed Index sitting at 60 and tech momentum firing on all cylinders. Buyers clearly hold the upper hand for now, though tight technical resistance levels mean we should stay alert for quick profit taking. Looking ahead to tomorrow, keep your eyes glued to the Producer Price Index data and central bank speaker commentary before the open. Any surprises in wholesale inflation could shake up rate cut expectations and trigger fast moves across interest rates and tech equities. And that wraps up today's market recap. If you enjoyed this breakdown, smash that like button, hit subscribe, and ring the notification bell so you never miss an update. Drop a comment below with your stock picks for tomorrow, and I'll see you in the next video.